put the spotlight on CEAT then, because this time the company did come out with the earnings, and on the margin front, it seemed to be taking a bit of a backseat because on a sequential basis as well, the margins have actually declined. But what's lying ahead for the company, and how does the demand prospects look like shaping up? Let's try and find an answer to that. We are being joined by Arnab Banerjee, MD and CEO of CEAT. Hi, very good morning, Mr. Banerjee, and thank you so much for your time. First up, let's put the spotlight on your margins then, because remember in Q1 you anticipated that the benefits of that cooling RM prices might be visible in Q3 and Q4, but the elevated natural rubber prices are still a challenge. So do you expect the margin pressure to persist in the near term as well, or do you anticipate the situation will improve given some of the price hikes planning in play?
Right. I did mention that in the second half, we will expect the RM prices to be better. The good thing is that it has flattened out. Q3 over Q2 was 1.2% kind of increase. Q4 over Q3 may be flattish again. We are a little cautious because rupee is depreciating and we have significant imports. And because there's been a recent spurt in crude. But when crude came down, the pass-through through crude derivatives did not happen. So we don't expect it to go up also when the crude is going up. If you look at the international rubber prices, they're still at a very elevated levels. Domestic prices have cooled down to about 190. So in sum and substance, we do expect it to be flattish. We have indicated it could be going up by about 1%. When it is flattish to 1%, we have little more leverage to increase prices in tandem and make up for some of the deficits in the past. So on that front, it is better. But yes, it has not come down in second half.
All right. Mr. Banerjee, also help us with the demand prospects, specifically from two of the key segments, that is passenger vehicle and the two-wheeler side. Because for passenger vehicle, we have seen that inventory destocking and the two-wheeler demand has been steady. But do you expect the OEM contribution to show a strong recovery in Q4 as well as in the first half of the next fiscal?
As far as CEAT is concerned, because of increase in share of business in two-wheeler and four-wheeler, because new models are getting launched with CEAT-fitted tires, CEAT-fitted vehicles, we expect OEM to bounce back for us. But the overall OEM market, as you mentioned, is showing signs of very low growth in passenger and some degrowth in MHCV. And two-wheeler is the bright spot in OEM. So if you're only talking of OEM demand, then our volume is going to definitely grow in Q4 over Q3, and it will continue to grow as new models, which I mentioned, with larger rim sizes, are going to come to the market with CEAT fitments. In replacement, demand is steady. We have grown in double digits in replacement in truck bus segment, in two-wheeler segment. Rural demand is very good in two-wheeler segment. It is outgrowing urban demand by almost 50%. And urban demand is also not bad either. In passenger car tires, it is somewhat lower, but still growing in mid-single digits, whereas it's double digits in both truck bus and for us, our growth, I mean. The market demand, truck bus is going to be steady, high single digit, passenger mid-single digits, and two-wheeler maybe in double digit as well. Off-highway demand is also good. In OEMs, it is picking up. Replacement, there's not the season. It is a down season for replacement. And if you notice, the top line is almost equal to the highest ever top line of Q2. So we do expect double-digit growth to continue in Q4.
Right. Mr. Banerjee, also want to talk about the Camso deal, because that was expected to be EPS accretive over time with an initial dip. Tell me, what kind of an impact can we expect in FY25 now?
FY25, no impact, because we have signed the agreement. Right now, regulatory processes are going on, including antitrust filings, etc. So the deal is expected to close only by May in first quarter of next financial year. So there'll be no impact whatsoever in Q4 of FY25.
Okay, point taken. But I just wanted to get a better sense from you regarding the price hikes. Will that be something that you'll be, kind of taking further in the coming months? And also, how's the export demand looking like?
On price hikes, we did take a price hike right at the fag end of quarter 3 because I had been mentioning we have not taken adequate price hike in 2-3-wheeler. We have taken good hikes in 4-wheeler and some hikes in MHCV tires. So in quarter 4, we can expect price hikes to continue. In January, we have planned hikes again in 2-wheeler, and we will further see opportunities in February and March. On export demand, order book is fine, but because of geopolitical situation, things are a little uncertain. I wouldn't say it's only on the negative side, but there is some pleasant surprise also. We are doing very well in the European Union in off-highway tires, in truck bus radial, and also in passenger radial. Our US GTM has taken off. We have visibility of truck bus radial sales in the next financial year, which we would like to improve upon. Our distribution network is falling into place. On the other hand, if you look at Brazil, where because of unprecedented depreciation of the local currency, there is a headwind against export to that country. So it's a mixed bag. Order book is good. So we're positive. We've grown in double digit. We continue to grow in double digit, and we see that momentum in quarter 4 and quarter 1 for exports.
Okay, good to hear that, Mr. Banerjee. Great having you on the show. Thank you so much for your time today.
Thank you very much.
Okay, that's it in trade for you. Currently down about 5.25%.
If you like this video, then like, share and subscribe to ET Now.